Welcome to the first edition of Pensions Week's Policymakers and Decision-makers. With me is Richard Greening, a councillor for the London Borough of Islington and a representative of its £800 million pension fund. Schemes like his have a once-in-a-lifetime opportunity to act like banks and gain superior inflation-linked returns from residential property, whilst also meeting a social good in helping the nation's acute housing shortage. Richard, welcome.
Thanks, David.
A pension fund's responsibilities are to its beneficiaries alone, but this investment, which is 2.5% of your fund, has a social good as well. How do you sort of square that circle?
Our primary aim with this investment is return. The fund was 72% funded at the last valuation, and that's really not enough. And we need to do something about that. And we see residential property as a high return, relatively low risk investment compared to equities. So that's the primary reason why we've gone for it.
In the announcement that came out in December, I think it was, about your investment, it said that there would be a stable 4% return, with a likely 5% sort of equity growth in the investment.
That's right.
So that is pretty attractive.
We think it is, and that's why we've chosen that product. The Hearthstone product also is quite well diversified as it accesses the whole UK property market. So it's relatively low risk.
From a housing crash?
Any asset can fall in value, but if you look at the experience of the last 10 years, then the housing market has been relatively buoyant compared to equities, for example, which have basically flatlined.
So this is a relatively new type of investment. So as I understand it, there were some objections from some people at your council about making this investment.
I think members were concerned, rightly so, about a new type of investment, something that other funds weren't doing and something that a lot of advisors have been very lukewarm about. However, we have come to the conclusion as the committee as a whole that we should go ahead with this investment.
One of the attractions of this sort of investment is that all the Basel treaties have restricted the amounts that the banks can lend to these investments, and so the pension funds like yours can step in and gain the sort of profits, the returns that banks were making in the early 2000s.
I think the residential property as an asset class is something which pension funds should be invested in from the point of view of the long-term returns, not just the short-term advantage that may be created by the banks being more restricted. It's the long-term returns that we're interested in, and that's why we've gone for this type of investment. Of course, as you said earlier, there are other aspects to a residential property investment, it is an ethical investment, unlike many of the holdings in shares that we have, and it is something which is going to help to address the housing shortage and also help to regenerate the economy. So as well as providing a good return for our fund, it's also something which we believe in from the social and economic aspect.
The social and economic side of it is it just a nice coincidence? You would have invested without those, but that's just a feel-good factor in a way, is it?
It's an important consideration. I mean, the primary consideration is return, but this is also important.
Richard, one last thought. In the announcement about your investment late last year, you said we look forward to other pension schemes joining the fund and to starting a mass movement which will help to increase the supply of much needed new housing in our country. I thought that was a little bit unusual. Pension schemes don't tend to make announcements like that. So is that partly selfish than that you have more investment in this fund, it's going to do better? Or I guess it's the social good as well. There's a double factor here.
Of course, it is partly self-interest that we do want other investors to come into the sector and the Hearthstone Fund as well. But the point is that there's an awful lot of assets tied up in pension funds which could be deployed more positively than invested in equities. If you look at how the markets are operating, equity markets are largely not being used as a source of finance for business, and therefore finding new ways of being able to finance new business ventures, including residential property, is something I think pension funds ought to be thinking about.
Richard, thank you for joining us today, and that sounds like a very positive development for pension funds.
Thank you, we're excited about it.